Hey everyone, welcome back to the channel. Today we're going to break down one of the most anticipated events in the Bitcoin world, Bitcoin halving. If you're wondering why this event gets so much attention, what it means for the price of Bitcoin, and how it might affect your investments, stay tuned. Let's dive right into it. Alright, so what exactly is Bitcoin halving? In simple terms, it's an event that happens approximately every 4 years where the reward for mining new Bitcoin blocks is cut in half. When Bitcoin was launched in 2009, miners received 50 Bitcoins per block. After each halving, this reward gets reduced by 50%. Today, miners earn 6.25 Bitcoins per block, and after the upcoming 2024 halving, it will drop to 3.125. Why does this happen? Bitcoin's creator, Satoshi Nakamoto, designed it to limit the supply over time, similar to how gold is finite. This process ensures that Bitcoin remains scarce, with a maximum of 21 million Bitcoins that will ever be created. So why does Bitcoin halving matter? It's all about supply and demand. With each halving, the rate at which new Bitcoins enter circulation slows down. When supply decreases but demand stays the same, or even increases, prices can go up. Halvings create what's known as a supply shock, which can drive up the value of Bitcoin if demand remains strong. This scarcity model is one of the reasons Bitcoin is often called digital gold. Just like gold, Bitcoin's limited supply can make it an attractive investment, especially in uncertain economic times. Let's take a quick look at how previous halvings have impacted Bitcoin's price. First halving, November 2012. Before this halving, Bitcoin was trading around $12. A year later, it reached over $1,000. This marked Bitcoin's first major price surge. Second halving, July 2016. Bitcoin's price was about $650 at the time. By the end of 2017, it had skyrocketed to nearly $20,000. This drew massive attention to Bitcoin and the crypto market as a whole. Third halving, May 2020. Bitcoin was trading at around $9,000 at this halving. In the following months, the price surged to an all-time high of over $60,000 by early 2021. This was driven not only by the halving but also by rising institutional interest from companies like Tesla and MicroStrategy. Now, while past performance doesn't guarantee future results, these historical patterns have made the crypto community highly optimistic about the impact of the next halving. But every halving is different. Here are some factors to consider for the 2024 halving institutional adoption. Since the last halving, more institutional investors and companies have become interested in Bitcoin. If this trend continues, it could drive demand further. Regulation governments worldwide are paying closer attention to cryptocurrencies. How they regulate or embrace Bitcoin could impact its future demand. Economic conditions, global economic factors like inflation and interest rates also play a role. In times of high inflation, for instance, Bitcoin is often seen as a hedge, which can boost its appeal. So, while the halving reduces supply, these external factors can significantly influence demand, impacting Bitcoin's price. Now, if you're thinking of investing in Bitcoin around the halving, here are a couple of strategies to consider. Dollar cost averaging, DCA. Instead of investing a large sum all at once, you could spread out your investment by buying Bitcoin regularly over time. This way you're less affected by price swings. Long-term holding, hodling. Many investors believe in holding Bitcoin for the long term, viewing it as a store of value. Bitcoin's history shows that it's had volatile price swings, but its overall trend has been upward. Diversification. While Bitcoin has unique properties, remember to diversify your portfolio. Other assets can help balance your risk, especially since Bitcoin is still a volatile and relatively new asset. But before you dive in, be aware of the risks. Bitcoin's price is highly volatile. Major price drops can happen quickly, sometimes due to regulatory news, market sentiment, or even tweets. And while Bitcoin's long-term trend has been positive, it's essential to only invest what you can afford to lose and to do your research. In summary, Bitcoin halving is a major event that affects Bitcoin's supply and potentially its price. With each halving, new Bitcoins become scarcer, creating a potential opportunity for investors. However, remember that market conditions, regulation, and other economic factors all play a part in how Bitcoin's price behaves. If you found this video helpful, don't forget to like and subscribe for more crypto insights. Let me know in the comments. Do you think the 2024 halving will push Bitcoin to new highs, or are we in for something different this time? Thanks for watching, and see you in the next video.